Hi friends, I really had to do this video because seldom such moves happen in the stock market, and I hope by doing this video it helps you make a better decision with your money. So in this video, I'll talk about the technical charts, some fundamental of the economy so you get to understand better, and a quick update on stocks like Square, Lemonade and Illumina. This is the SPY, an ETF tracking the SP 500, the mother of all ETFs. SPY has just did a very bullish move, and let's talk about it. I seldom do such videos, but back in May, I did a stock market update video, and I told you guys that if I see a candle over here, I foresee a stock market going upwards. I drew this horizontal line back in May, and let's recap what happened. So back in April and May, the stock market couldn't break past this resistance line. It was really difficult to get past, and when it finally broke, this resistance line became the support line when the candle broke. See, I even drew this candle back in May, and it did happen, and the stock market went upwards. This line is a very strong support and resistance line, and if we look far back, you notice that it was major resistance previously back in 2018 and 2019. So once it broke past, it took a little while to retrace, and it went all the way up until the pandemic happens. I'm going to draw another horizontal support line. You'll notice that this is the resistance, and this was like quite near the resistance. And the candle has just broke. So I foresee the stock market pushing upwards because this resistance line has become the new support line. Notice there's a red line and a green line here. The red represents exponential moving average 200 and the green represents 50. How do you get these lines out? You just click indicators and you search moving average. You click exponential. Over here, there is some kind of settings button. So in the settings button, you just key in the number you want. Let's say if I key in 20, you notice there is a blue line that comes out. But for this video, I'm not going to use any other numbers but 50 and 200. Some will ask, why 50 and 200? If you like Google why these numbers, you notice it's a technical indicator that everybody uses. So 50, 200, you notice that the 50 has just crossed the 200, and I was waiting for a while to confirm the move, because sometimes it can give you a false breakout. And this confirmation, it is as accurate as it can get because it has broke a resistance here and it's now at the new support. Why is this crossing here very, very important? Is because if you scroll back in time, every time there is a crossing, the move is tremendous. If you scroll back further, back in 2016, a crossing happened and it shot all the way up, but sometimes there could be fake crossing, so I needed a confirmation because sometimes they may false breakout. So this current crossing is a confirmation of the bullish move, and if I scroll even further back, the last crossing was back in 2012, and back in during the 08-09 crisis, it was a cross and the big moves happened. So back to today, the 50 and the 20 EMA just crossed, and with this broken resistance line, this is a very bullish confirmation move, and I foresee the stock market going higher. I mean, meantime, there could be some kind of retracement, which is very normal. I expect the stock maybe might retrace back down a little bit, but overall, it is a very long-term bullish move upwards. So that's the technical charts. Appreciate an early thumbs up. It's really super helpful for the channel. Let's talk about the fundamentals. With so much money printed and the upcoming second stimulus package, one thing is definitely going to happen: inflation. I did a detailed explanation in this video. I'll link it up here and down below. I highly recommend you to watch it if you haven't, because those who did and understood what I said made solid profits. So all this money is being printed and it has to go somewhere. In my opinion, it's going towards the stock market. You see, well, the money has to go somewhere, right? Most of the cash in the world is not idling, either via consumerism or investments. Consumerism is definitely dropping. So please get it out of your head that there is a lot of money sitting in the bank doing nothing. If you look at this article, less than 0.1% of money sits in the bank doing nothing. I'm really sorry to tell you this, and it may offend people, but sitting on cash is really poor man's mentality. However, I too understand investing is not easy, and if you don't have the time or the mentality to invest in individual stocks, Do the safest, foolproof way. I have been teaching this for years and years, and this has never failed me or anybody. The least risk is to invest into an index, like dollar cost average into an index like the SP 500. The SP 500 won't give you fantastic returns, but it will go up over the long term, slowly but surely. So in fact, if you invest in the S&P 500, you will outperform like 90% of the fund managers and retail investors. So think about it, you do nothing and outperform smart people who are paid millions and millions of dollars. So now let's talk about stocks. Honestly, sometimes I wish I do the simple shit like give general financial advice, like how to invest $100, do like stimulus check videos, put thumbnails like, oh, I quit my job. Can't go wrong, like put in tons of disclaimers. When I share what I'm investing, if the stock price goes up, people ask me, is it too late? And if the stock price goes down, they ask me, what's wrong? Oh, fuck my life.
Out the door, you see someone that you know and they ask you how you are, and you just have to say that you're fine when you're not really fine, but you just can't get into it because they would never understand.
Look, I'm not angry or pissed. I always put myself in like your shoes and ask myself, how would I want my investing mentor to like teach me? So I set a few criteria, and this is just one of them. Like, I do not want to be a financial advisor that talk in circles and not giving a definite answer, like a politically right answer. You know when they answer your questions and you still like don't know what to do. So now let's talk about stocks. So for Square, I am very bullish. For Tesla, I am bullish definitely. It's a no-brainer. For Illumina, it's an amazing company and I'm still holding on to 100 shares. The only thing that bothers me is that they do not have the long read technology and I want to see them do more in that field before I continue adding more positions. Illumina is still a fundamentally very, very strong company. Congrats those who invested, especially for Square. I replied to most comments below about Square before the earnings and congratulations, it's now at 150 plus. Now, Lemonade. I done what I said. I added at $69.42. Tesla fans, you will understand why. It's a super long-term position and it's just IPO, so the stocks can go up 10 times and go down 10 times. It's just a small position making up like 2.5% of my portfolio. I mentioned in the Lemonade video that that position will go over 5 to 10 years. Just put a little bit of money there and let time do its job. While I do not agree that everything is optimum, but I know that this is the best that they can do in their position. Think of Tesla when they just started. Now, Lemonade just IPO. They are in a much stronger position to do what is necessary to make this work. My investment thesis hasn't changed. If mentally you are not able to like take drops in stocks, you shouldn't buy stocks and just buy the index and thank me later. Buying a stock is not simply like click and buy, you know. Your mental game must be strong and research and conviction, else the markets are just going to fuck you up. Concluding this video, I gave solutions to both active and passive investors. Stock market looks bullish over the long term. However, do not FOMO, fear of missing out. For Tesla, it's outright buy now, and for everything else, just dollar cost average. Hope you find this video useful. Thanks for clicking the like, cheers, and as always, invest safe.